If you're a UK limited company director taking your whole income as salary in 2025, it could be costing you thousands. In this video, I'll show you what happens if you take 50,000 or 100,000 as salary versus dividends, and how to push your take-home pay even higher with smart legal tax strategies HMRC does not shout about. Let's say your company has £50,000 available after corporation tax. If you take it all as salary, you'll pay around £7,500 in income tax and £3,000 in national insurance. Plus your company pays another £5,600 in employer's NI on top of that. Altogether, that's roughly £16,000 in total tax and NI, leaving you with about £39,000 take-home pay from a total company cost of around £55,500. But if you take £12,500 as salary and the rest £37,500 as dividends, your total bill drops to about £13,000 and your take-home jumps to roughly £36,800 from the same £50,000 company profit. So even on a modest profit, you're already keeping around £2,200 more in your pocket, and that gap widens fast as profits grow. Most directors I work with don't stop at 50k profit, they're building six-figure businesses. But once your income goes above £100,000, you start to lose your personal allowance. Between £100 and £125,000, every £2 you earn removes £1 of that allowance, creating a 60% effective tax band. It's one of the nastiest stealth taxes in the UK. Option 1 is to take it all as salary. Your gross salary is £100,000. Your taxable income is £100,000 minus your £12,500 allowance, leaving £87,500. Your total income tax would be £24,614. Your employee NI £3,762, and employer NI £12,500. Total tax and NI £40,900. Net take home pay £71,600, and the company cost £112,500. Option 2 is to take your £12,500 salary plus £87,500 dividends. Salary tax is 0, it's under the allowance. Employee NI is 0. Dividends, after you've used your £500 tax-free allowance, your total dividend tax will be £19,924. Your take home will be £80,100. The same 100k profit, so no employer NI, salary, dividends, beats all salary by £8,500. If you take the whole 100k as salary, you'll pay around £41,000 in tax and NI and end up with £71,600. Use the classic £12,500 salary plus dividends mix and you'll only pay around £20,000 total tax, keeping about £80k in your pocket. That's an £8,500 difference just from how you extract your own money. Now let's talk tax strategies. Salary and dividends is just the starting point. Here's how 4 legal strategies can push your take home even higher. Strategy 1, use of home as an office. If you run your business from home, you can claim use of home as office as a company expense. HMRC lets you use a flat rate of £26 per month, or you can calculate an apportioned share of your household bills, things like heating, electric, broadband and council tax. For most directors, that works out at £1,500 to £2,000 per year in deductions, saving roughly £500 to £700 in dividend tax. There's no need for a lease, just include it in your company accounts. The second strategy we're going to talk about is family payroll. If your spouse or adult child helps with real admin or bookkeeping, you can pay them £9,100 a year, just under the NI threshold. It's fully deductible for the company and they pay no tax or NI. That saves you around £3,000 in dividend tax, since that £9,100 would otherwise be taxed at 33.75%. And because you now have a legitimate second employee, your company can claim employment allowance, cutting your employer's NI bill by up to £5,000 a year. Strategy 3 is utilising your BIK and getting a company vehicle, electric preferred. An electric car through the company can be a massive win. This benefit in kind is only 2%, so a £50,000 Tesla costs just £1,000 of taxable benefit and you will pay around £400 in personal tax, and the company pays £138 NIC. The total cost for the year, £538. Compare that to a personal lease at £6,000 a year, that's £3,500 saving. Strategy 4 is relevant life cover. A £200 a month policy equals £2,400 a year. If you paid that personally, you'd need £3,625 gross after dividend tax. Through your company, it's fully deductible and has no benefit in kind, saving about £1,225 per year, plus 1 million of life cover for your family, tax free. Let's have a look at the stacked totals. 100k after corporation tax, base salary plus dividends 67,200, use of home as office 700, family payroll 3.5 grand, company electric vehicle 3.5 grand, relevant life 1,200. Your total take home is now jumped to 76,100. So instead of 67k, you're taking home around 76k. That's 9 grand more every single year just by planning smarter. Most accountants just file numbers. At Tax for Pros, we build strategies. Grab the tax game plan, it's in the description below. It shows you exactly how to structure your salary and dividends in 2025 with a monthly checklist and self-assessment cheat sheet. And if you want to protect your family the tax efficient way, request a relevant life quote. The link for that is also in the description below. All these figures assume corporation tax is already being paid. Once that money's in your company, how you extract it decides how much you keep. Stop giving HMRC more than they deserve. Grab your tax game plan, it's in the description below.